Well, that is the State of the Union address from President Trump, the greatest ever. And of course, lots of adjectives out there in the first, 10, 15 minutes that we've been watching and hearing Donald Trump, the president of the US. But he has certainly shaken things up over the last 1 month or so since he's taken charge, and in a big, big way. Welcome to Bazaar Morning Call. We're coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. Surabhi and Nigel with me, guys. Hi.
Hi, morning, folks. I was just observing these guys. How many times did they get up? They love giving standing ovations, right? I think every second sentence you have to stand up. So it's good exercise, if nothing else.
Not short of action out there, though.
Well, a lot of action. And
on the field, guys, let's not forget the on-field action. We're in the finals while we're watching that important speech.
I didn't want to drift away from, what you all were focusing on. So let's focus.
Hold on to all our victories. Absolutely. Even the one that our boys in blue got us last night.
Let's hope the momentum comes on into the markets as well.
Yeah.
Great match. India's into the final, and let's hope that the Nifty as well does pretty okay. But Prashant, let's take stock.
Yeah, and I think the speech which is going on, what we'll do is we'll keep going back in and cutting. Our team is listening to the speech, and we will cut back in because it may be a market-moving speech in any case. I mean, it may happen towards the end of the speech, etc. And essentially, the reason is last night you had the Commerce Secretary Lutnick, who essentially said that Trump may actually roll back the 25% tariffs on Canada and Mexico. Will Trump announce that now? I mean, in that speech which is going on right now, and maybe somewhere in that he kind of throws in, he may not say, the tariffs are a day old, so he may not immediately cancel the tariffs, but he may provide a ramp off that, if these countries do this, the tariffs are essentially temporary and I'm going to take them back. By the way, the Canadian dollar and the Mexican peso both rallied on these statements from the Commerce Secretary last night. He's there, in those shots which are coming through from the U.S. Congress. Now, the big story was the drop in the dollar. The dollar index fell 1.1%. We're about 105.57 on the dollar. It's a bunch of things. And many people are wondering, what is the reason behind this big underperformance in the USD? And there are 3 or 4 reasons. Without going into all of them, what kind of stood out from last night was the big rally in the euro. The euro USD went up to broke above the 1.06. It's kind of broken out and taken out some technical levels. And the euro rallied because there were news reports that US and Ukraine will be signing that minerals deal. Germany is setting up a defense fund of some $500 billion and a few other things. Euro has got the largest weight in the broader dollar index. When the euro rallies, it depresses the value of the US dollar as we see it. And essentially, I think at the margin, that is what played out. But in any case, lower dollar is essentially what the Trump administration wants. And, so far it's kind of working out. Overnight equities, S&P was down about 1.25%, 10-year yield, about 5 basis points higher. The 10-year, by the way, swung 11 basis points. It actually first went down 6 basis points. It ended up 5 basis points. So complete seesaw is what we saw. The China National People's Congress begins today. It runs for 2 days, and we'll watch out for any headlines. I think the Hang Seng market is up about 2.5%. And, of course, the Chinese markets have done really well this year as the other markets have struggled. I'll just sort of wrap this up very quickly with, the levels for you. Nifty, and I've been saying this for the last 2 days now, broader markets, looks like there is a little bit of selling exhaustion. Volumes are on the upside. Volumes are not there on the downside. It's very evident out there. Not all portfolios may be recovering. Lots of stocks in your portfolio will still be hurting. But the broader point is maybe we're at the point where you're getting a little bit of selling exhaustion. It may be temporary, but that is where we seem to be at. So near-term support for the Nifty stands at about 21,964. That is yesterday's low. But past price action suggests that 21,800 to 22,000, these were lows which were made between this zone in 2024. That's the broader, bigger support zone. Resistance is the 40-hourly, which is 22,302. For the Nifty Bank, it posted a positive daily close. Here, we need to cross the 40-hourly now. 438 is that number. These are very, very near-term levels. And then 48,550. And yesterday's low for the Nifty Bank is 47,841. That is the near-term support for the Nifty Bank out there. GIFT Nifty will give you a sense of how we're likely to start. But, of course, all of this is contingent to the man who's on air speaking, and we're listening to it. And as I said, we will cut back to it if there are any market-moving headlines, any announcements which are made. 60 points lower for starters. Guys.
Yeah, absolutely. And it is all eyes on the president, given what the Commerce Secretary said yesterday, the fact that there could be some sort of a rollback. And in fact, in his comments, Ms. Lutnick said that it could be announced as soon as Wednesday. Now, it may or may not happen in that speech itself. But maybe, the president gives some indication that he's still open to parlays around this. still open to negotiation and discussions. He's a man who loves deals in any case. So let's see if there's one coming with Canada and Mexico, at least, on tariffs. There was no specific mention of any rollback or any possibility of deals with China just yet. So let's see how that plays out. Asian markets are trading fairly mixed. But there's a hint of green across the screens because of this optimism that maybe this will settle. It can't be as bad as it seems right now. The Hang Seng's up about 1.5%. In currencies, it was not just the euro rallying yesterday. In fact, the yen, the Swiss franc, some of the safe haven currencies, they did extremely well because the U.S. market was going into this major slump. The comments from the U.S. Commerce Secretary came in after the U.S. markets closed, so the equity market couldn't quite react to it. The yen and the Swiss franc rose almost, 1% or so higher yesterday. The yen is retaining some of that gain, and it's been trading below that 150 handle for a while now. The euro in its rally actually has crossed 106 or 1.06 to the dollar. That's been the rise in the euro, which is interesting because while the currency was rallying, European equities were very, very weak yesterday. They were down anywhere between 2% to 3.5%, which was the German market. So very, very bleak out there. And the markets there are concerned about this rise in spending that the Eurozone as a group is now talking about, higher borrowing. It's the first time since COVID that the Eurozone is looking to borrow 150 billion euros as a group. So what does that do? That's also pushing up, by the way, long tenure bond yields in the Eurozone, whether you're looking at the bonds or some of the other yields as well. Generally, those 10-year yields have been inching higher, while the US yields were ending lower yesterday or were heading lower yesterday. The EU, the ECB, by the way, is meeting this week. So that's tomorrow. The wide expectation is that they'll deliver a 25 basis points rate cut. But now with all this talk of spending and maybe, a slightly more inflationary policies, let's see what happens. China, the headlines have actually started coming out. So the numbers are in and they're absolutely along expected line. 2025, China is expecting an almost 5% GDP growth. What they're saying is around 5%. That's the phrase they're using. The budget deficit that target has increased. That ceiling has gone up from 3% deficit to 4% deficit. And it tells us that China is keeping the options open of giving a further boost to the economy, stimulus, or of course, warding off the tariff wars as well. The inflation target in China has come down from 3% to 2%. So that just reflects the higher inflation in the country. Quickly coming back to our session here, it was, of course, a relief because at least we managed to recover from the lows. But the June 4 lows, they would perhaps still be in play given the volatility all around us. That's the fund flow picture. Foreign institutional investors were sellers 3,400. Again, DIIs more than offset that. Great DII buying. Second day running coming in today. And like I'm saying, those election day, result day lows are still in play, not too far away, 200 odd points on the Nifty. Let's see if we get there or not. 21,884 is at one level that I will keep in mind. Very quickly to talk about, if you're looking to play the F&O market, then you need to look at the dates very, very differently because all the dates are changing. The Nifty weekly expiry is now being shifted from Thursday to Monday. The monthly expiry also moves from the last Thursday of the month to the last Monday of the month. And not just that, all contracts, whether it's the Bank Nifty or whether it's the Fin Nifty, the Nifty Mid Cap Select, the Nifty Next 50, all of those contracts will expire on the last Monday of the month, so which is pretty interesting. All this is effective the 4th of April. So interesting. Not sure why they've done it, but Thursday to Monday becomes now the day to look out for volatility.
Well, I was just looking at a rough note in terms of market share. It appears BSE had higher market share on Monday, so that's why NSE is making a bit of a move on that front. But, besides that, yesterday the US markets were at the day's low. It was better that you focused on the cricket game, right? Look what Lutnick had to say this morning, the Commerce Secretary.
It's all different.
Maybe things will not be as bad as it seemed. The US markets came off the lows and the futures right now are in the green. Positive. Well, let's take stock of the markets, though. In the recent past, the Nifty actually has underperformed. We're down closer to around 15% from the recent peak. So it appears, if you give and take everything, it appears the Nifty after this sort of a correction and with the tailwinds that we have, with lower crude oil prices, you have a softer dollar index, you'd have to be in the camp that the Nifty is closer to the lower end of the range in terms of a correction. And you may not be wrong on that front. Just on the Nifty itself, maybe the broader markets have some more correction. But just going by the data points we got and post that correction, the Nifty, it appears the valuations are more palatable and maybe we're at the lower end. Moving to the data points that we got post-market as the FI, actually the data in the F&O market is quite positive because yet again they added more longs than shorts. And even if you look at it, the client positioning as well, there were more longs than shorts that were added in yesterday's trading session. So both the FIs as well as the clients, they added more longs than shorts on index futures. What about on stock, on the Nifty as well as the Nifty Bank? The Nifty Bank yesterday was an outperformer. There was a bit of a short covering bounce that played out. And if you break up the FI data, it appears they're leaning more towards the Nifty Bank. So that will have to lead the way from here on. What about stock futures? Well, in yesterday's trading session, there was clearly a short covering bounce that did play out. They added longs yet again in yesterday's trading session, and the shorts did cover out. And as we have been stating, their long positioning on stock futures is more than 15 lakh contracts, and they continue to remain net long out there. Moving to the options data, two strikes are very, very active. 22,200 call, 22,000 put, fairly active. And you just need to punch in the levels, going by the technical levels, going by the options data as well. And it appears the Nifty, well, 21,800, if that holds, you'll have to say that somewhere around here, there should be buying. 21,800 to around 22,000 odd. The next level of resistance comes in at around 22,500. The Nifty Bank as well, this 47,500 mark is extremely crucial. And then you'll get more confident once it gets past that 49,000 odd mark. In terms of stocks that I'm looking at, two stocks. One is a stock that's moved into the F&O ban. That's Manappuram Finance. So I'll keep an eye out on this one. And as Subri mentioned earlier as well, I'll be keeping an eye out on BSE because NSE, now they've gone ahead and changed the expiry date. So let's see if there is some kind of impact on BSE because it appears now NSE is taking the fight to BSE. So let's see how that goes.
It's cat and mouse, Nigel, right?
Yeah, indeed.
And I think there'll be more moves maybe now from the
from the BSE, yeah. Will they react to that?
It has to. Logically, they have to, right? Otherwise, they're left with fewer days to trade. So we'll talk more about this in greater detail. John Stolfus is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, good morning. Good to have you with us here. I mean, what we discussed may change as President Trump is still speaking, and he may announce some relief for Canada, Mexico. If he does announce, a ramp off in some way, partial rollback, how will the market take it? Is it a broader message, or you think is there a broader message, or is it all case to case? What's your sense?
We would think that most certainly, first of all, great to be on the show this morning in India. Just thank you for the invitation to be here. Would say this, that I think if we were to see a rollback in the tariffs that have been put on to Canada and Mexico, where we have interdependencies in terms of manufacturing, natural resources, all kinds of things that are key to all three economies, we would naturally say, we'll see the markets we would expect that the markets would have a good rally on that. I also think for the global markets, it would suggest that indeed the tariffs are not meant as something to separate us, but is rather to bring up the point that the U.S. is looking for a fairer regime of tariffs among its trading partners around the world. And it's also looking to bring back some businesses that were given away over the course of the last 40 or 50 years, or even more than that, since the end of World War II, where the U.S. practiced really a largesse that was not beneficial ultimately to the U.S. economy. It was terrific for getting better prices on goods that were imported into the country, but it did damage our manufacturing base and even our ability to produce health products here in the United States. We learned that, of course, just recently with the COVID-19 virus, when we couldn't find things in cities like New York and throughout the U.S. So this all looks like where we are is something completely different, as Monty Python might say, in terms of administration in Washington. I think the president, and I'm not political, when I speak as the chief investment strategist of Oppenheimer, I'm politically agnostic. But we would say that what's noted here is things like a secure border, bringing down inflation, bringing jobs back. But also, I think ultimately, the tariffs are not meant to separate our trading partners, but rather to bring us together and likely even bring about a more robust trading system where it diversified away from one country centricity in terms of the global supply chain, which should be marvelous, we think, for India, for Mexico, and many other countries around the world, both in emerging and developed international markets.
John, hi, great to have you on the show today. So you just want to focus on, what chatter you're hearing around a market like India, because we're in this global tariff storm and it's all sort of swirling around us. But what's happened is that India has been underperforming for a while now. There are the U.S. concerns, there's China. I don't know, are you hearing that people are getting more optimistic on China? And what's the sense? Why this disenchantment with a market like India?
I am surprised at the disenchantment with a market like India, though I would say this, India had a terrific run for a while there. And then I think what happened for investors who were used to investing in China and they saw China making an effort to revitalize its economy, I think some traders went into that market and they moved in to take advantage of very low prices and likely, in the case of China, established business relationships which are still going to be new for India. But I think ultimately that India really is a winner in this diversification process. In the emerging markets, India, in the developed international, Japan, Korea, and a variety of others, and in Latin America, Mexico and Brazil and Peru and Chile.
John, we are going to wrap up this conversation, but hope you come back soon again.
Thank you.
We're going to cut back to that speech which is going on, the State of the Union address, so lots of moving parts there. Thank you again very much, and it's a pleasure for us to have you as well. We'll take a quick commercial break here. Our list of top stocks to watch with our research team coming up in just a bit from now.
Welcome back. So what we've been telling you is that the situation across Asia is a lot better than how Europe and Wall Street was looking like last evening. And that's thanks to the hopes that there will be some sort of a negotiation, maybe a partial rollback on those tariffs with respect to Canada and Mexico. Let's pull up the implied open. The gift nifty will come up. It's still indicating that we'll start slightly negative. But, OK, now it's actually become a little, weaker, 84 points down. Let's see how this plays out. A couple of important stocks to track as well this morning. So we have our team standing by with the list of top stocks to watch. Over to Rima first. Rima, why are you watching out for Coforge?
Well, three sets of news. One, the company's won a very large deal valued at $1.6 billion over 13 years. Secondly, stock split, 5:1. And thirdly, two small tuck-in acquisitions. The company will be acquiring Rhythmos for $30 million and TM Labs for 20 million Australian dollar. But the big news is the large deal win of $1.6 billion. This perhaps is the largest ever deal for Coforge. Jefferies today has raised the target price to $10,035 and the stock closed at 7,200. So massive upside seen for Coforge. They raised EPS estimates by 3 to 5%. Jefferies says the company's largest ever deal of $1.6 billion not only provides greater revenue visibility in FY26, but improves its positioning in the travel verticals and opens the door to more such large deal wins. It also reflects the company's ability to gain share irrespective of the demand environment. Back to you.
All right. Rima, thank you very much for that. I mean, Coforge, right? I mean, if there is one management in the IT services space which exudes confidence to grow, it is Coforge. And we'll try and have Sudhir Singh back to talk to us about this one and more. Well, Power Grid is the next one, which is in focus. Hormuz is here with details. Hormuz, morning.
Morning, Prashant. And Power Grid has been declared as the successful bidder for 3 projects to establish the interstate transmission system on a build, own, operate and transfer or a BOOT basis. And it has won this under the tariff-based competitive bidding. And the first one pertains to the transmission system for evacuation of power from Rajasthan, REC PHV, and the augmentation of transformation capacity at Banaskantha in Gujarat, and the transmission system for integration of Kurnool 4 REZ Phase 1, which is in the state of Andhra Pradesh. So 3 projects for which Power Grid has been declared the successful bidder. The stock is down 30% from the top. Expect some positive reaction today.
Okay, all right. Thanks a lot for that, Hormuz. And let's hop across to Manglam. He is here to tell us about Adani Wilmar. Morning, Manglam.
Good morning. So those from the north and central India would be very well aware of this brand of ketchup, sauces and chaat masala called Tops. Adani Wilmar has gone ahead and acquired the owner of that company, GD Foods. They will acquire 80% at an enterprise value of about 603 crores. The remainder stake to be acquired by FY29 itself. It is a leading packaged food player in north and central India, the third largest sauces maker in India itself. Their FY24 revenue was close to 386 crores with EBITDA at 32 crores. Gross margins that they operate at is 48% with EBITDA margins at around 8% itself. From an Adani Group standpoint, it does not add too much to their revenue, just about 4.5%. But the important part is the scale that they can take this company to. on the top line basis, and even from a cost synergy standpoint, given the 40 basis point slips between the gross margin and the EBITDA margin itself. Over the last 3 years, the company has been doing extremely well when it comes to revenue growth. This is GD Foods that I'm talking about. So this will be a good addition at a decent valuation for Adani Wilmar. See the stock open in the green.
Well, Mangalam, spending my childhood in the north, I can tell you it's definitely a household names. Way before all the fancy foods started trickling into our fancy new grocery stores, Tops really was a big brand out in the north in Delhi for sure. Interesting acquisition. Thanks for that. Let's quickly move on to Vinny now. Vinny, morning. Why are you watching out for Biocon and RVNL?
Absolutely. So for Biocon, positive news flow continues. Last week we had seen the launch coming in for liraglutide for the company in the UK market. Now they've received final approval for 2 ANDAs. One is for lenalidomide capsule, as well as the other one is for dasatinib tablet. So important drugs coming in for the company on that front. And one is a tentative approval which they've received. Nonetheless, a very positive sign coming in for Biocon. We're expecting green here for the company. RVNL, they've received a letter of acceptance coming in from HPS EBL, which is around 730 crores. This contract is expected to be completed over a time period of 24 months, and this is from the central zone of Himachal Pradesh. There's going to be some infra work that they will be doing over there in terms of development as well as distribution. So that is why we're expecting a green for RVNL as well.
All right, Vinny, thank you very much for that. Well, Grasim and Star Cements will also be in focus. Vinny, tell us more.
Absolutely. So both these stocks also we're expecting green here on the screen. For Grasim, they've commenced the commercial production for Birla Opus paints. Now, they've spoken about 6 plants, right, that they would be opening up. Now, this is the 5th one. So 5 out of 6 have already been commercialized. Overall, the total capacity for decorative paints now stands at 1,096 milliliter per annum. So keep an eye out on Grasim Industries. That's an important one. Star Cements also in focus. They've been declared as a preferred bidder, and this is coming in as an e-auction that they won this bid for the North Borough Hundong limestone block. The limestone block has a resource of around 192 million tons approximately. So positive is what we're expecting for Star Cement as well.
Thanks a lot for that, Vinny. But let's wind this down with Vamakshi, who's going to wind it down with some more stocks and news. Morning, Vama.
Good morning, Nigel. Let me first start off with GE Vernova T&D. The stock will be in focus today because they've received 3 orders worth 500 crores from Power Grid. Now, this is for supply and installation of transformers and reactors under bulk procurement, and the orders will be executed over the next 36 months. Keep in mind that analysts say that the backlog of the company will now rise to 11,300 crores plus, providing very strong revenue visibility. So, bodes well for the company, going with the green for this counter. Force Motors is another counter that will be in focus. The company declared its auto sales numbers for the month of February. As far as the overall sales are concerned, they are witnessing an uptick of almost 46.3%, and a large chunk of this is being driven by the growth in domestic sales. Domestic sales were up 48.8%. The exports, on the other hand, were rather weak. They saw a downtick of almost 16.8%. But given that the contribution of exports is quite low as compared to the domestic sales, going with the green for Force Motors. And lastly, keep an eye out on Piramal Enterprises, and that is because the promoter group has gone ahead and purchased 2.4 lakh shares from the open market, which represents nearly 0.11% stake of the total paid up share capital of the company. And with that, their stake has now risen to 46.41%. Generally, promoter buying for their own company is considered to be positive, so going with the green for this counter as well.
Absolutely, and this is a trend that we have started tracking and noticing now to see if it gathers more pace and momentum, indicating maybe the worst is almost over. Thank you for that, Vamakshi. Let's quickly recap the stocks to watch today. The ones that have positive news flow around them are Power Grid, Coforge, Adani Wilmar, Biocon, RVNL, Grasim Industries, Star Cement, GE Vernova, Force Motors and Piramal Enterprises on the back of positive news flow. And today there's actually nothing which is likely to open in the red.
Okay, all right. Well, let's hop across to Manisha Gupta, who's joining in to help us out with all the commodity action overnight. Morning, Manisha.
Thank you for that, Nigel. I'll start with the crude oil prices because the sharpest of cuts really seem to be coming in here. Brent is trading at a near 6-month lows now, and the U.S. crude oil price is at a 4-month lows. Apart from all the tariff concerns and the fact that the U.S. to charge 10% surcharge on Canada energy, markets are looking at that impact in sense of demand. The second point is OPEC and allies are going to increase output by nearly 138,000 barrels per day from the month of April. And then the markets also are looking at the U.S. crude inventories itself, which has seen a bit of a decline. The metal prices, while the overnight wasn't so great, we saw copper, aluminum decline 0.5% to 1%. But with the surge in China and financial actions, we are looking at some support coming back in many of these metals. So while Asia did not start so strong, we are looking at 0.5% of a gain coming for copper right now. Even iron ore prices are off its 4-month lows. Steel is looking at some gains as well. This is all after Chinese measures today morning.
Okay, all right, Manisha, thank you very much for that. Let's, I don't know if the Trump visuals are still coming in. Let's just dip in for a quick 30 seconds, and I think there is some conversation happening around tariffs, so let's just listen in.
Thank you very much. And I also want to recognize another person who has devoted herself to foster care community. She worked so hard on it. A very loving person, our magnificent First Lady of the United States.
Okay, well, still waiting for those tariff conversations, and maybe he will address the Canadian and Mexican tariffs, which perhaps were coming through.
So I'm just, because our team has been obviously listening in.
Yeah.
So far, what he said while we were telling you about all the top stocks to watch, what he said is that April 2nd, reciprocal tariffs will kick in. Whatever they tax us, we will tax them. If they do non-monetary tariffs, we will do the same. So it's exactly what he's been saying. There's no suggestion of a rollback on Canada and Mexico, at least so far. He's saying 25% tariffs on aluminum and steel as well. They've been imposed and they will remain. So as of now, he's only repeating his earlier known stance of reciprocal tariffs that whatever you tax us, we will tax you. So far, he's not indicated that he's in the mood of any sort of a reprieve or rollback on Canada and Mexico. But let's see. We'll keep sort of going back into that.
Absolutely. I'll take a break. Devin Choksi on the other side. Stay tuned.
Welcome back. Hope you're having a good morning. Well, Devin Choksi, MD at DR Choksi FinServ, joins us on the show. Hi, Devin. Good morning. Good to see you, Ben. Let's talk about the good news first. Coforge, they've gone ahead and bagged a big order, and the street is quite excited about it. What's your view on the stock?
Nigel, good morning. Well, I think on the fundamental merit side, definitely I think it's a good news for sure. Not completely sure about how exactly I think it is going to pan out in coming 1 to 3 years as far as the execution is concerned. But one important thing which is coming out in this particular times, many of the IT companies are successfully winning some of the large orders. And probably I think it proves the point that I think they are in requirement as far as I think the customers' solutions are concerned. Where probably I think even the AI-based or computing-based requirement, I think they are the ones I think who are winning the orders. So it's a good sign. Though maybe one would like to see some of the large orders coming into the likes of TCS and Process to get even more stability as far as I think their output is concerned. But nonetheless, I think the small though, I think are few though, I think the orders are kicking in as far as I think some of the IT companies are concerned.
Devin, hi, morning. Great to have you with us today. I just wanted to get your thoughts in on Ola in case any investors are still there or people feel that they're kind of stuck. Of course, stock's been correcting like the rest of the market, but the news flow around Ola is getting a little sketchy. We heard about the 1,000 people being fired, the job cuts, and now IFCI wrote a letter because Ola for their battery business is perhaps not meeting some of the PLI stipulations. They're behind timelines, and IFCI is asking for an explanation because they're running that scheme. So the news flow is getting a little hazy. Your thoughts on the stock?
Yes, very good morning. Well, I think at this point of time, no particular view on the stock. I think we have been maintaining that we are wanting to see the company coming into the profit, after which I think we put our recommendations or we would like to look at this company. But it is far away as far as I think that particular situation is concerned. So we haven't analyzed enough about the PLI related news which has come and the adversities arising due to that.
No problem, Devin. Let me ask you about the other two-wheeler stocks, because yesterday, I mean, look at Bajaj Auto, 5% down. Suddenly now the stock's at a one-year low. It used to be the best performer till about a couple of months back. The sales have been weak for Hero, for Bajaj Auto. We were speaking to the management yesterday. They're saying, it's not a cause of worry right now. But clearly the market is sensing something. Two-wheeler stocks, what would you do?
Yeah, I think on the face of it, the export business in the last month also has done well. Though I think the major challenge could come now with the kind of currency misbehavior across the globe. Vis-a-vis dollar, I think most of the currencies have become, they have gone down. And that could be one of the reasons for which I think the company which is trying to make, higher inroads into some of the export markets may face at least the near-term challenges as far as I think the currency-related purchasing power is concerned. But otherwise, I think it is the strongest of the lot, as I see it. Even in the domestic market, the kind of transition that they are doing into the premiumization and the products I think that they've been bringing in, they would be the last one to go down as far as I think the market share is concerned. And that's where probably I believe that this company looks a little bit more stable. Maybe the market will not be able to accept any company which are putting at a slightly premium today because of the reasons as well. I think that the current correction in the price maybe I think is giving an opportunity to gradually accumulate the stock into the portfolio.
Devin, any thoughts on BSC and the NSE change in terms of the expiry? Cat and mouse, Devin, and I think BSC will respond, right? I mean, this just seems to be clearly a way to gain more market share. I mean, volume market share depends on the number of days you have from the contract. With this, BSC now, NSE now has 4 days. I mean, logical that if they're allowed to, and I don't know why not, I mean, BSC will come back and change their own, move their own expiry day.
Yeah, Prashant, I think you use the right phrase, cat and mouse, I guess. I think the unfortunate part is that I think both the exchanges are trying to prove the point in the bringing business in derivative markets. Hardly do we realize that I think our underlying cash market is completely neglected. The very fact that I think the FPIs are selling this entire portfolio over the last 5 months, it does suggest that underlying cash market depth is weak. As against which, I think you have got a derivative market which is offering a significantly large amount of activities. The cash market is weak, and neither of the exchange is putting enough amount of effort to build up the underlying cash market. So, best of luck to all of us, I believe. I think the way in which the derivative market is being cultivated in this country.
You know, guys, I just want to make one point. The idea was that the exchanges, SEBI said that one expiry per exchange per week, right? Guess what now? You have NSE on one day, BSE on one day, 2 exchanges. I think MSCI, which is Metropolitan Stock Exchange, is coming up with a contract. So that's going to be number 3. NCDX wants to launch an equity contract. That's number 4. And I think at some point, MCX will launch an equity contract. So, 5 days.
So ultimately, you're down to 5 days, something to play.
So you can have it 1 exchange, 1 contract, 1 per week. Or you can have 5 exchanges, 1 contract per week. So 5 days are covered. I mean, I think it's something for, essentially, what do they want to get to? Of course, now got change at the SEBI as well. So we'll see if there is, because if the aim is that आपको सट्टा कम करना है, सट्टा तो तभी भी होगा because 5 दिन तो है, 5 days, 5 contracts.
But the only thing is in a market like this, when there's just disinterest and you're sort of tired and bombed out in terms of sentiment, then I don't know, if there'll be so many takers for contracts beyond NSE and BSE, but it's a market. It can recover, mood and mindset can change anytime.
It becomes very, very tricky. Imagine if you're taking an options position and then you're taking it into the weekend, coming back on Monday.
That's a very important point.
So what will happen is there could be some people who start squaring on Friday as well. So we'll have to see how that works.
Absolutely.
And rough, analysis, and we'll try to get further analysis going on this, is that on Monday, BSE had a larger market share in comparison to Friday and Friday in comparison to Thursday as well. So that's why NSE has gone for Monday. Now we'll have to see what BSE comes back with. So
that's a very important point. There's too much of time gap between open position on Friday, squaring off on Monday. Anything can happen. 2 days is a very long time today.
So the expiry is all turned around. What is the expiry NSE now on?
So Monday, weekly
Monday,
contracts
right?
Yes,
expire
Monday
on
from
Monday.
And
then the quadruple witching, as they call it in the US, last Monday of the month, everything will expire. Nifty, Bank Nifty, and all
different.
that.
I'm saying weekly. So basically, NSE now gets Monday's expiry.
Yes.
Nifty, yeah.
BSE is on Tuesday.
Tuesday, right? So NSE now
Sensex.
gets, I mean, basically the idea behind when I said 4 days is what NSE gets. The idea is that people have limited capital. They will move from one contract to the other. So BSE is Tuesday. So essentially NSE will get Wednesday, Thursday, Friday and Monday, 4 days. And then, of course, I mean, there is the expiry which comes in on Tuesday. So that's the broad logic for, and of course, the point about Monday market share being higher. We'll have to see how BSE responds, but that's a extremely talked about, debated, discussed subject on social media, etc. as well. We'll take a quick commercial break here. Devin, thank you very much for joining us. Appreciate it. We're going to come back in just a bit. Sudarshan Sukhani and Mitesh Thakkar are going to be with us with some technical trading ideas as well. Stay tuned. Okay, welcome back. GIFT Nifty will come up on your screen, gives you a sense of how we are likely to start. It's down about 60 points. So 22,127 is where GIFT Nifty is at now. Sudarshan Sukhani and Mitesh Thakkar are with us with what they're making of things as we start another session. Gentlemen, good morning. Mitesh, your first thoughts? Index first, and then we'll get to stocks as always.
Good morning, Prashant. My understanding is that, the markets remain weak and the direction is on the negative side, but we'll keep getting intraday pullbacks because of the oversold levels, readings on the indicators. So I think, the idea is that bounces back to about 22,350, 400 would be an excellent chance to go short, but even in the near term, the first hurdle which the Nifty must clear to at least suggest that there will be a bounce back would be 22,150, 160. I think above that, you may expect some more pullback rally. But if we don't clear 22,400 in the near term, then I think we might eventually break these lows and go below as well. The other option is that we do that right now. For that to happen, I think 21,950, 970 zone should be taken out. If that goes, then 21,600 is the next logical target.
Okay.
All right, got that, Mitesh. Let's bring in Sudarshan as well. Sudarshan, hi, morning. So are you trading the indices at all? What's the sense? And what are the levels to track on the index, even if you're not trading it?
Yeah, good morning. No, I have started trading since yesterday. The Nifty, the point I made yesterday was that the Nifty is giving a sense that it is probably coming to a short-term low. The key word here is short-term, but still. See, now we are being bombarded by bad news. And the Nifty is not falling 300 points, 200 points, 400 points. Yesterday, it had a very modest decline and it recovered quite handsomely from the lows it made in the morning. I think we could follow that pattern today also. So sharp dips in the Nifty for me are now buying opportunities. Keep a 200 point stop loss, use options. The value of the option itself becomes a stop loss. But I would like to go long and see whether this actually results in a decent bounce. In any case, the downside is very limited for the time being. I also have a point, Nigel was making that Friday, who will carry positions for Monday on the NSE? And he's quite right. What will happen is that Friday will then become the virtual expiry day, creating even more confusion. Let's see what happens.
No, absolutely, and big overnight risk, right? Especially with Trump and all the headlines, etc., whatnot. So Monday becomes even more, hopefully, I mean, not hopefully, but it kind of gets, the risk of gap ups and gap downs becomes very large. We'll take a quick commercial break here. We'll do trades when we come back with both Sudarshan and Mitesh in just a bit from now. So 4 minutes to pre-open.
Welcome back. It's 9 a.m., which also means that the first of the pre-open rates have started trickling in. But as usual, they're a little haywire right now. So let's see. Give it a couple of minutes and then figure out. You can see the Nifty, Sensex are going in opposite directions all over the place right now. So let's see how this settles. But the overall indication was that Asian markets were in a recovery mode, hoping that there's some sort of a final sanity that prevails on tariffs. But let's see if that happens or not right now. The implied open was suggesting that we'll start 80 points lower. So, let's see where the final settled rate for the Nifty is. Quickly going back to our technical experts then for some stock ideas to trade today. Mitesh, what's on your list?
Yeah. So I have a mix of buys and sells. I think Bandhan Bank was a buy yesterday as well and did well. Today also, I think it can continue the momentum the way the chart is shaping up. So buy above yesterday's high, buy above 148 with a stop at 145 for a target of 155. ABV is a buy. Again, similar strategy, buy above yesterday's high. So buy above 5210, keep a stop at 5130. Look for targets of 5390. A sell on Maruti with a stop at 11775 for targets of 11300. And a sell on Jubilant Foods. Keep a stop above 620. Look for targets of 590.
Sudarshan, what about you? What would you trade?
Well, it's a mix of buys and sells. Atul is a buying opportunity with a stop under 5,115. PFC is a buy, stop under 375. There are two intraday shorts. Colgate, we can put a stop above 2440, and Berger Paints with a stop above 490.
Colgate, Berger are shorts. PFC is a long. And which was the first one we missed it, Sudarshan?
Atul.
Okay, Atul Auto or Limited?
Atul Limited.
Atul Limited. Okay, got that. So that's the stock on your screen, which Sudarshan is referring to. So 2 longs and 2 shorts. Sudarshan, thank you very much for joining us. And Mitesh, thank you very much for being here as well. Well, first corporate interaction of the day. Nigel, Azad Engineering.
Well, that's right. Let's focus on Azad Engineering. They have raised close to 700 crores via the QIP route. What are they going to be using it for? We have Mr. Vishnu Malpani, the executive director at the company, who joins us on the show. Hi, Vishnu. Good morning. Congratulations on this fundraise. Some marquee names have appeared in the list. Break it down for us. How do you use this 700 crores of QIP? And also, you have a fair bit of exposure to the United States. We have been listening into President Trump, off and on in the last 90 minutes or so. Any impact on your business? More than 30%, I think, comes in from the United States. All these tariff talk, does it impact your business? Please go ahead.
Sure. First of all, thank you so much for having me on the show. We're very, excited to announce that we've been able to raise 700 crores in this, tough, volatile times. And for the question that you asked, I'd probably need a minute to just explain that to you. Our order book in December 23 was about 1,800 to 2,000 crores. And in the last 12 months, today it's at about 6,000 crores. So it's important to understand what happened in the last 12 months, that led to the surge in the order book from 2,000 to about 6,000 crores. So the message is important that, Azad has been working with our OEMs for the last 10 years, and we've never seen a surge of orders and contracts of this size. And there is a definitive reason for these orders to be in place. And the reason is Azad supplies mission and life critical parts, which have a longer qualification cycle. And historically, Azad has always focused 75% on qualifications and 25% on revenues. And now, since most of the qualifications have been completed, Azad was able to sit down with each of our customers and lay down the roadmap for the next 5 to 7 years. And that's why you see, the demand has opened up, which was available to us has now opened up. And that's why you see a lot of these contracts coming in. And that is why Azad was at about 120 odd crores in revenue in 2021. And today we're doing roughly about 4x, 5x from wherever we are. And that's why we've raised capital to build and fuel our growth for the future, because the 10x capacity that Azad was talking about that we are building, the entire plan, which was made on paper back in 2021, 2022, inch by inch, customer by customer, product by product.
Vishnu, just to clear the air, so this money, 700 crores, the entire money will be used as growth capital. Is that correct?
Absolutely. So we'll be deploying this towards building infrastructure and growth.
Got it. So that clears that point. The point on the, we appreciate the fact that your order book has gone up drastically. But what about the exposure to the United States? Because President Trump is announcing tariffs, does it impact your business?
Okay. So if you've known Azad's historical performance and our competitiveness, so we are already at about 20-25% more competitive than China and about 30-35% from the rest of the world. Now, if tariffs were to be talking about looming tariffs, India's, as far as I understand, India only has reciprocative tariff, which are, lower in terms of under 10%. But for each of the other geographies that we compete with, I think the tariffs are pretty heavy. So we were already very competitive, and with these tariffs on China, Mexico, and other places, I think Azad's order book is only going to get flooded, because this is what we understand from our customers also, and we are able to see that because our customers are more aggressively telling us to put up more capacity to do this. So I think it does not impact our business if I have to answer that. But only with tariff on our competition in other geographies, it only makes Azad's situation much better.
Okay, so you don't seem to be too perturbed about any potential tariff hikes. Vishnu, help us with an outlook on two numbers or two areas. One is, now you're almost closing the year FY25, right? So just give us a sense of where your top line will probably close out. And a sustained CAGR over FY26, FY27, how will that look? And on margins is a bit of a question, because at least in the third quarter, your margins had come down a little bit. They were down by about 100 basis points. So was that a one-off, or is there more sustained downside pressure on the margin? What can we expect in FY26 on margins?
No, I think we are confident of the guidance that we've given to the market for FY25. I think we are still sticking to it. We are looking at a growth of 25-30% from last year, which we said. So that continues, and we don't see any pressure on the margins, etc. In fact, in 9 months, we've delivered a PAT of about 18.6%, EBITDA of 36+%, and we've so far delivered a revenue growth of upwards of 32%. So I don't think we see, any pressure on margins, etc. from that perspective. And this capital that we've raised for infrastructure and capacity is only going to fuel the growth further for us. We have to, really supply the parts or the contracts that we signed, which are totally about 6,000 crores. So order book to sales ratio today is about 12x where we stand. So we are only looking at, one strategy of execution at our end from our perspective.
Vishnu, but on the margin, I mean, you have to take on record that the margin used to be above 36%, 36.5 plus, and now it's 35.5. So there is a 100 basis points dip. What I'm trying to understand is that on a full year basis, FY26, will you be in this 35-36% zone, or could it come down?
So our margins will be in the range of about 33 to 35% only. So I think that is going to be consistent. So our EBITDA margins will be consistent in this range.
Okay. Vishnu, hi, morning, Prashant. I just had one question, just to sort of take off from my colleague's point. So you did 350 crores in top line, right, last year? So 25-30% kind of growth is what you're expecting? So 450 this year, 550 next year?
I mean, I won't be able to comment on the future guidance, but then our growth, guidance of 25-30% remains consistent for a longer period of time. And I think we'll be able to get the information, I think, after Q4, once we close the financial year. But then, we're not looking at any changes in our guidance, in our top line or margins.
Okay, all right. Thank you very much, Vishnu, for that. Appreciate you joining in, and we look forward to more chats, more conversations as we continue to track the business and you continue to execute. Thank you indeed. That's Azad Engineering. Stocks, of course, fallen off quite sharply, like everything else has in the market. But I mean, it's also a well-liked, well-owned name in that sense. Well, Sudarshan is back with us, and so is Mitesh. We got the end of the pre-open at our hands. The Nifty will come up on your screen, so let's ask them if they've seen anything. Okay, 10 points. So that's it's absolutely flat. And I think that's a point that Sudarshan was making earlier as well, that markets stopped reacting to negative news headlines in that sense. And it's more steady, more stable, maybe trying to settle down here. Sudarshan, your 9-10 calls?
Well, buy a PFC with a stop under 375.
Mitesh, what about you?
I'll go with the buy on ABB if it crosses yesterday's high. So buy above 5210 for targets of 53.90 and a stop placed at 51.30.
All right. Mitesh, also wanted your comment. This entire re-jugglery of expiry date from Thursday on the NSE, it's going to be going to Monday. How do you see this, impact the markets? How do you see, option writers? What would they do? A quick comment on that.
Nigel, my understanding is that, while there is no official clarification, just a notification of the change in the routine. is that, people will be slightly, or at least the retail traders will be slightly more discouraged to keep their option positions on the selling side open over a weekend, because then you have 48 hours for any news flow to impact the market. So I think this looks like a measure to curb some kind of speculative activity, apart from the fact that, the NSE could be looking at ways of gaining market share as well. So I think it looks like a mix of two factors over here.
Okay, well, let's see how this plays out and how it impacts volumes. Thank you very much for that, for the trading calls. Mahindra & Mahindra, by the way, is a top-performing stock on the Nifty right now in the pre-open session. Stock's up about 2%. UBS has come out with a positive view on the stock, and they think that the recent correction in M&M, that's excessive, it's overdone. Let's go across to Sudarshan to understand the rationale here. Sud?
So UBS has upgraded Mahindra & Mahindra to buy from neutral, but has cut target price to 3,300 from 3,460. But still, it's an upside of nearly 20% from current levels that you are seeing around 2,660. So what does it say? That it's saying that 90% correction that company has seen, stock has seen over the last few months, it's an overreaction, and it's expecting M&M auto volumes in FY26 to be around 9%, which would be much better than the industry. That industry is seeing a growth for total auto, it's in the range of 3 to 4% or below than that. Also, it said that SUV segment is expected to see high single-digit volume growth, and also on the agri side, growth is going to be healthy. And it says that Tesla's anti-concerns around that are the overreaction, and it's unlikely to have a major impact on M&M. So overall, UBS is positive on Mahindra & Mahindra.
All right. The management has sounded confident as well. And especially on the tractor side, last two interactions, the tractor business has been in focus there. So thank you very much. Let's just revisit Coforge with Rima. Rima.
Thanks so much for that. So there are three sets of news. One, the company signed its largest ever deal, $1.6 billion over 13 years. Second, stock split, 5:1. And third, two tuck-in acquisitions. The company will be acquiring Rhythmos for $30 million and TM Labs for 20 million AUD. But the big news is the large deal win. Jefferies today has raised the target price to $10,350. One, it provides greater revenue visibility for the coming year. It improves its positioning in the travel vertical, and it also reflects the company's ability to gain deals, vendor consolidation win in a difficult environment. Kotak has upgraded Coforge to a buy. Their target price stands at 9,000. Morgan Stanley says that if we assume the deal starts contributing from Q1 of FY26, then it could add $80 to $120 million of incremental revenues in FY26, and that's about 5 to 8% of growth, depending on the ramp-up schedule, but 5 to 8% incremental growth for FY26, and therefore there could be upside risk to the earnings estimates. Back to you.
Okay, well, I think we've got a minute to go for the market open, and it's a flat start on the Nifty, which essentially means that there may be some attempts at recoveries. Broader markets, of course, in any case, over the last 2 days, 3 days, has stopped. There are enough stocks which are going down, but volumes are on stocks which are rising, and that is always an important signal to pay attention to. Mid-cap index is down about a quarter. The small-cap index will come up on your screen. And there also is absolutely flat. One of the interesting things I've noticed from many that we speak with is generally the consensus seems to be converging around the fact that, well, there is perhaps a bounce which is due. Markets have been oversold for a while, and there'll be a bounce. But almost a near consensus that, well, this is a temporary bounce, and then there will be another big fall. But that is now getting to a bit of a consensus kind of zone. And consensus is usually not always right. It's actually rarely right. So we'll have to see. It reminds me of 2020 when that first wave down happened, markets rebounded, and everybody kept waiting for the second sort of sell-off, which never happened. Of course, the sell-off has been nothing to that magnitude, but just from the recent history linking what has happened. Well, what do we have? First rates coming through, 22,120. We're up about 0.18, 0.16%. Nifty Bank is absolutely flat. Okay, slightly higher, 0.4 higher. 48,400 is where that is. And the sensex is up about 0.2. Mid-cap index is up about 0.25%. And, it's almost equal up and down on the Nifty. The heat map is, it appears on your screen. Equal number of stocks up and down. 22,150 on the screen, about 60 points in the green, and more up than down in the broader markets, although it's very, very early with stocks still opening up. Surbhi.
This is looking good, not bad at all. Power Grid, 2.5% up. Mahindra & Mahindra, 2% higher. HCL Tech, Infosys are some of the IT names. Even Tech Mahindra and Wipro. So IT is having a good start to the morning, you'd have to say. Between, 0.75% to almost 2.5%, depending on the stocks you're looking at. There is Hindalco. There's ICICI Bank that I can see early up. The Bank Nifty is up about 0.25%. Let's check the other banks as well. ICICI is up for sure. SBI is managing a gain of just under 1%. And HDFC Bank, okay, that's the one that's sulking a little bit. It's still down. Otherwise, IndusInd is also positive. Kotak is slightly negative. So some up, some down for banks. Speaking of the downs, let's see what's exerting that downside pressure. Bajaj Finance and Finserv, very marked sort of selling on these stocks early into the morning. 2.5% down on Finance and about 1.5% down on Finserv. Tata Consumers, Sun Pharma, Cipla, SBI Life, Dr. Reddy's, Nestle. So the sense you get is FMCG Pharma not in favor today. These are stocks that have opened lower, but otherwise it's not too bad. Let's look at Reliance and L&T to cap it off. Reliance is managing some gain for now, and L&T is slightly negative. But otherwise, it seems IT is taking things higher this morning.
Well, and BSE is the big casualty this morning. NSE is taking the fight to BSE. It seems they've gone ahead and changed the expiry days. Well, just take a look at that stock. It's down 6.5%, so big downtick. So on the downside, the stock of the day is BSE, and on the upside, it's Coforge that's doing well. But crude oil prices have cooled off. And from an India macro perspective, that's a big tailwind for us. And some of these OMCs, they saw a big rally yesterday. They're building on to those gains. HPCL is higher in today's trading session. The OMCs, not the oil producers, but the OMCs. So HPCL is up close to around 3%. Pull up BPCL as well as IOC. Both of them, I think, have opened up well in the green. Canfin Homes from some of those financial companies, well, that's down close to around 3%. But BSE now down close to around 7.5%. So big downtick is what we're seeing on that particular name. Stocks that are doing well, RVNL, that was one of the noted gainers today because they won an order. Welspun Specialty Steel as well. That's a smaller company that's looking to raise money via the rights issue. There's an order win as well of more than 200 crores from BHEL. So that's why that stock as well has opened up well in the green as we speak. Welspun Specialty Steel, I think that should come up for you on the screen. Cigniti Tech, that's another one that's up close to around 6.5%. One of those stocks that's down close to around 20% in this year. So a bit of an up move is what we're seeing. Decent looking screen, guys. 3 stocks advancing for 1 stock that's declining. I don't think you can ask for more after what you've seen in the last many trading sessions.
As well, just adding to your list, with the Tops acquisition, for which they're spending around 600 crores, right now stocks up about 4%.
Absolutely. Since it's all about sort of global stuff and global macros, and that's the Nifty, by the way, so still holding on with about a 60-odd point pop at this stage, and we will, of course, continue to track what's happening as far as individual names, etc. is concerned. Let me just take a look at in the broader space if there's anything else which is coming up, which we've not addressed so far. By the way, market breadth is now 1,400 up and 600 lower, so it's firmly on the way up with more up than down. So that's the situation. Actually, you've got enough and more action. And out of the gates, decent volumes on the upside, as I've been pointing out for the last couple of days. Lots of names with 2, 3, 4%, well-traded, well-owned names with decent-sized volumes coming through right now. BSE, I think, as both Nigel Surabhi mentioned, 8%. That's the biggest volume-led cut right now. And, of course, it's followed by Bajaj Finance, which is at number 2 with the volume, second largest volumes. So 2.6% lower on Bajaj Finance. You can look at maybe a Bajaj Finserv, which is down 2. Policy Bazaar is down 1.5. Chola Finance, Granules. So these are some of the other names which are coming up. MCX is another one. MCX is down about 1% or so as well. So 45, 66. Well, it's macros and market macros are what are in focus. Trump's goals are to get bond yields lower, dollar lower, and oil prices lower as well. This is coming in from one of the foremost watchers of global macros. Louis Winston Gov is the founder of Gavkil Research. It's a premier research outfit based out of Hong Kong, widely followed by institutional investors here in India as well. I've got quite a few followers. I had the opportunity to sit down with Louis yesterday, and we spoke about some of the issues which are top of mind right now. I want to play out a quick portion from that interview. Listen in.
The big question is, are the tariffs a tool towards achieving something, or are they the end goal? I think so far there's still a lot of signs that Trump is looking at tariffs like a tool to achieve something else. Now, fundamentally, what does Trump really want to achieve? I think the first goal right now, what seems pretty obvious, at least to me, is that contrary to Trump 1.0, who kept tweeting about, the stock market making new highs, and what they're really worried most about is three things. They want to get the bond yield down, they want to get the US dollar down, and they want to get the oil price down. And pretty much every one of these policies that they've implemented, now there's other things, yes, they want to stop the drug flow, etc., but everything they're implementing is really driven by these three goals, and including the tariffs. For me, and I could be wrong on this because it's very hard to predict what Trump is going to do next, but for me, the tariffs remain a tool, and it's a tool that you're going to use to beat up America's trade partners, whether Japan, whether Korea, whether China, and to say, look, guys, I'm going to tariff you unless you go out and you buy U.S. treasuries and unless you raise the value of your currency. I think the next few months we get a lot of this until basically Xi Jinping and Trump meet in May, and then we'll have a better outlook on whether tariffs are here to stay, or whether some kind of Mar-a-Lago Accord, to use Scott Bessent's term, whether some kind of Mar-a-Lago Accord gets achieved.
Are the three things you mentioned consistent with a higher stock market?
I don't think it's as much of a priority, to be honest.
That's an interesting, important point, because, I mean, the general assumption is that he's very focused on the Dow being at a new high. It's like a point of pride. But you're saying actually the target this time is not higher stock markets, it's lower cost of borrowing.
I think so. You'll notice this time he hasn't tweeted once on the level of the stock market.
Okay.
You've had tweets from Elon Musk, you've had talks from J.D. Vance, from Scott Bessent, from Trump himself on the 10-year yield. And I think the reason for that is actually the setup today in the U.S. is completely different.
Yeah.
The big problem is in the second half of this year, you have a massive amount of debt to roll over. Because remember, in the second half of 2020, interest rates were at record lows. Every single U.S. corporate went out and issued debt. You know, when interest rates were below 2%, you're a CFO of a company, it'd be criminal not to issue debt. They all did it, and most of corporate debt in the U.S. is 5 years. So now, these guys all have to roll over the debt in the second half of 2025. If they roll over at much higher rates, that means that CapEx is going to get cuts. That means that employment is going to get cut to pay for the debt. They have to get the cost of debt down. Without that, you're facing a really bad 26. And guess what happens in 26? Midterm elections. So take the pain up front, get the lower interest rates so that the economy can be rebounding by 26 on the back of lower energy and lower interest rate costs.
Okay, let's just complete the tariff point.
Sure.
So I think average tariffs into the U.S. are 2.5%, 3%, somewhere there.
Yep.
By the end of the year, where do you see those?
That's a really tough question because I think a lot is going to depend on those negotiations with China.
Okay.
And here...
But they're going to be higher. We don't know.
I think they're going to be higher because part of, I think, Trump's view of the world is foreigners should pay more. Now, I'm not quite sure how he came to that conclusion, but essentially, one of his hardcore beliefs is foreigners have been taking advantage of the United States, and they need to pay more. And a lot of these policies, like the golden visa thing, where foreigners are going to pay $5 million to move here, even though you already have an EB-5 visa that costs $800,000 and only 2,000 people take a year. Somehow millions are going to take the $5 million option. There is this perception of foreigners have to pay. So, yes, there will be higher tariffs. The big question is, will it be marginally higher? So you say 2.5%. Will it be 10? Will it be 12? If that's the case, that can sort of come out in the wash. Like if you got a 10% across the board, that's not going to throw the global or the U.S. economy off the rails. If you move to 25, 30, then all of a sudden, that's much more problematic for global growth.
Okay, let's talk about what is important for emerging markets as well, which is the U.S. dollar. You're saying he wants the dollar lower, and so far it seems to be working.
Yes.
Right? Yields are down, I think, about 50, 60 basis points in the 10-year over the last 1.5 months. Dollar is lower as well, the broader dollar. What's your sense, Louis, here?
Well, look, I think... when you look at Treasury Scott Bessent, Treasury Secretary Bessent, his very first thing when he got into his new office was first thing he did was to pick up the phone to call his Japanese counterpart and to essentially tell him, look, the yen is too low. which it is. The yen is ridiculously low. If you spend any time in Japan, it used to be that if you went out for dinner in Japan, you'd have to check your bank balance to make sure you could afford dinner. And now, you go there and, things are really, really cheap. So bottom line is, the U.S. does want a revaluation of Japan, does want a revaluation of the won, the Korean won, does want a revaluation of the renminbi. That's going to be, obviously on the table with the discussion with Xi Jinping in May. I think there's a good chance that gets achieved because all these currencies are today massively, massively undervalued. The U.S. dollar is very expensive. You go travel in the U.S. today. For most of my life, traveling to the U.S. Was a decent value experience. Today, it's completely out of whack relative to everywhere else in the world. Yes, the U.S. dollar has to come down. It's too high.
But Louis, isn't it quite conflicting that you are you're doing the fiscal consolidation, and there is a possibility of a dollar going down? You're just talking your way through, or you really want to implement? You can really push this through?
Yeah, that's a great point. You're absolutely right to highlight that usually fiscal consolidation, you tend to have a bit of a stronger currency. Now, having said that, in the past 2 years, you had massively pro-cyclical fiscal policy in the United States, and the dollar still went up because, at any one time, I think you have many factors can impact a currency. Yeah. And in recent years, the biggest factor impacting currency has been interest rate differentials because the U.S. yields were going up, U.S. dollar was going up. If they're going to be successful in bringing yields down, then partly through Doge, partly through cuts in government spending, maybe a little less issuance of treasuries than the market had expected, maybe arm twisting China, Japan to buy more bonds, a little bit of this, a little bit of that, get yields a bit lower. I think the U.S. dollar does roll over from the current level of overvaluation. I think it's happening, actually. It's already starting.
And I think it'll be good news for capital flows into emerging markets if that would happen as well. Of course, the other stuff will play out as well. The other thing is the market here in India has been weak. I think the market here in India and the US have been very, very tightly correlated. Two best performing large markets in the world last few years. But here we've started to pull back. US, the S&P is just under 5% away from its all-time highs. Do you think we're starting a correction in the US as well, especially large cap tech, which actually is the only space which has mattered, which has driven the US outperformance, is a top in there? Your thoughts?
Yes. No, I think we've just had a massively important event with DeepSeek. DeepSeek changes the world we live in. It changes it on many different fronts. First, until DeepSeek came around, the perception was that the US could contain China technologically. The fact that China all of a sudden shows that it's at the same level on artificial intelligence as the U.S. shattered this illusion. The second reason it mattered is that up until 10 minutes ago, the widespread belief was that all these huge Mag 7, these big cap tech stocks, could in essence build monopolies for themselves through unprecedented capital spending. That if you wanted to play at the AI table, you needed to put $50 billion a quarter on the table as your ante. DeepSeek has also shattered this belief. And so all of a sudden, the idea that you can spend your way into building a monopoly for yourself, into building ever bigger moats, has been completely undermined. And I think with that, you have started to see a rotation in the market where, indeed, investors start to say, well, hold on. If Microsoft, Google, Amazon, if they're not going to be the massive monopolies I thought they were, do I still want to pay 35 times earnings, 40 times earnings? Especially if at the same time, you're starting to get other stories around the world. Now, you pointed out, in recent years, there's been only a handful of stories. There were really three. It was gold, U.S. tech, Indian equities. That was it. Like anything else you did was kind of lame. But now what you've seen is while the U.S. starts to fiscally tighten with Doge, China is fiscally easing and starting to do a lot of pro-consumption measures. Europe is fiscally easing. And so as the fiscal easing shifts from the U.S. to China and Europe, lo and behold, China and Europe start to outperform. All of a sudden, there's other things to do in the market. Maybe I don't need to just own Microsoft at 35 times earnings. There's other exciting things to do.
Okay, well, the game is changing. That is the view coming in from Gavicle out there. Well, let's come back to what's happening here and now. Let's just have the BSE stock price up. It was the biggest volume-led loser this morning, down about 7-8% the last I checked. The reason at the margin, perhaps, of course, is that NSE is now sort of ramping up its game in terms of gaining back some of the market share on the F&O side. Sriram Krishnan is with us, a Chief Business Development Officer at the NSE, the country's largest exchange. Sriram, good morning. Great to have you with us here. Thank you very much. Prashant this side. What is the reason behind the move, Sriram?
Good morning, Prashant. Over the last few weeks and months, we have seen many actions taken by stock exchanges in the country with respect to the expiry date. And you've seen, expiry day shifts being undertaken by other exchanges. And there are also some new exchanges who are planning a foray into equity derivatives to launch weekly expiries. I think it all follows from the SEBI rules, which require only one expiry per exchange. But if the intention of the regulators is to have one expiry, I think it makes sense to choose the optimal day of the week. It's a routine exercise that we undertook, and we feel that Monday would be the best day for our expiries.
Okay, all right. Hi, good morning, Mr. Krishnan, and good to have you on the show. Well, it's clearly made the other exchange very nervous in terms of a stock price. That aside, the rough analysis that we have got in the last 12 hours or so is that BSE had a higher market share on Friday as well as on Monday, which NSE now believes that, with changing the expiry could pull it back. Did you all do some rough calculations on Thursday? The rough market share, I believe, is in low single digits, while on the other days, that's on Friday as well as on Monday, it's in the vicinity of around 15 to around 20%. Can you give us some numbers if you've done some back of the envelope calculations?
No, the rationale for this change is not really, anything on the numbers and in terms of, what we will gain or how we will look like if we make this change. The rationale for this decision is more to take into account the fact that there are lots of geopolitical events, developments over the weekend, and Monday is a great day to therefore have the expiries. That was how we wanted to think about it. Of course, we have been receiving feedback in the last 11 hours. We will, obviously keep all the feedback in mind, but we've announced this change keeping, the efficiency and the seamlessness in mind. And, obviously, these things can be reviewed from time to time by exchanges, and we will therefore review if need be.
Now, Mr. Krishnan, morning, sir. Thank you so much for joining in. So two parts to that question. One, you're saying that there are a lot of geopolitical changes. I mean, the counter argument could be, and that's a point that, our colleague Nigel here was making as well, that now if you have a position open on Friday and you have to come back on Monday and Monday's expiry, so you have to square it off, there could be a lot of, volatility in between. Weekends, there's a lot of news flow. That's one. And second, I mean, there must have been some thought in terms of volumes. Do you feel that Monday will give you more volumes than Thursday? Is it that you've sort of been analyzing this at Monday for other exchanges that chose Monday till now? Were they doing a lot of business, which is what you want to sort of now capture as well?
So I think the way to look at it would be, over a period of time, we have been waiting and watching to see what could be best based on feedback from various constituents in the market. And the way we want to look at it and the way we want to see this is, that we have announced a change for the first time after a really long time. And the others have done it. BSE did it from Friday to, Tuesday, a few weeks back. And, I think they would have had similar reasons and similar analysis to back their judgment and decision. So this is a change which we have similarly undertaken after our internal reviews.
Got it, Sriram. Just a quick point. Now, there are, as many are saying, maybe now BSE changes its expiry day. So, right, it becomes a bit of a, maybe too much change. By the way, do exchanges need SEBI approval for these changes?
No, the SEBI rules permit a change in the expiry day, and prior approval is not required. But we have duly intimated SEBI about the change as required by the rules.
have you heard from SEBI at all with regards to all of this between when you've announced this and now? Because if these days keep changing, it's like a bit like a cat and mouse. I mean, then what happens? And will at some point, SEBI step in and say, well, you got to run these by us. Otherwise, there's just too much change. Sriram, any thoughts at all?
Well, I'll tell you. I mean, this can possibly, be resolved if we all start appreciating the spirit behind SEBI's rule changes. And I think it is fair to say that SEBI thought about the expiry day activity, the huge amount of speculation going on, and they deemed that, reducing the number of expiry days would be the best way to confront this malice. And if that's really the case, then a single day for all expiries in the entire market is the real solution. And so proliferation of weekly expiries on every day of the week through multiple exchanges, like MSCI, for example, has a plan. Likewise, NCDEX seems to have a plan. MCX seems to have a plan. Then there could be OTCAI who might come up with a plan. So proliferation of weekly expiries through multiple exchanges is no different from one exchange potentially offering expiries on every day of the week. So perhaps, the solution lies in, one single expiry for the entire market. That could be the effective solution to this malice.
And I was saying exactly this in the morning, Sriram, that, everybody's got a plan. So Monday, Tuesday, Wednesday, Thursday, Friday, all 5 days, you'll have expiries eventually. So then, one exchange, one expiry per week. I mean, that idea is lost in that sense, right? So as you're saying, will you propose this to the regulator? Maybe that is the way to go. As you said, that is a solution, a way out of this, how this can be resolved, as you put it, Sriram.
No, I think, in discussions on this topic, these sorts of ideas have already come up and we've gone through many iterations of what are potential solutions to some of these challenges. And we need to do the right thing in order to protect investors, particularly retail investors. If we really believe that there's a lot of speculation on expiry days, then the solution lies in controlling the expiry day activity, and there should be just one expiry day for the entire market, for all the exchanges put together. I think that will be a fair approach, and possibly, it's time for the industry to think about it.
I think that's something which I think we'll have to sort of take note of and build on and get more opinion, etc. But that's an important point. Yeah, guys.
Yeah, just Mr. Krishnan, to sort of round off that point, and your point is well taken. The whole idea was to limit retail speculation. Then are you really limiting it? Because it's not one exchange offering 5 products on 5 days of the week. It's 5 different exchanges offering different products. So 1 per week. So I can still go on speculating. But what could be a suggestion or a work around this? Because the counterpoint immediately will be that it has to be a free market. All exchanges should be allowed to offer their products, and all exchanges should be allowed to flourish and innovate. So then what would be a reasonable solution that perhaps the NSE could think of and could tell the regulator about?
No, the way we would like to look at it is that investor awareness and education is something that we have to work on. At this point in time, we are probably faced with a population of investors who need to be, well aware of the downside risks of trading options, for example. And SEBI has done some analysis in the past, which reflects that retail investors seem to be losing money trading options. But of course, they may be making money in other asset classes. That aside, it is our responsibility to collectively upgrade and build capacity in the market. Yeah. And if that's the case, then we should be limiting expiries. That's the limited point I'm making. And alternatively, if we say there is going to be 1 weekly expiry permitted per exchange, then I think there will be some changes that you will see with respect to the selected expiry day for a given exchange at a point in time. Everybody will reserve the right to do what is best for them under these circumstances based on feedback from market participants from time to time.
You're making a solid pitch, sir, but if BSE goes ahead and alters their expiry day, do you think y'all as well will look at the same? or it stays at Monday?
I will not be able to comment on it, but obviously, there could be feedback from people who trade NSE contracts as well. And we are here to deliver what the market wants. We are not here to deliver what our own plans are. Therefore, we will keep listening to the market participants, and based on feedback, which is coming in, by the way, through emails and phone calls and everything, which is all being recorded and monitored, and we will therefore take steps as required based on how this situation evolves.
So, Mr. Krishnan, just to finally clarify before we let you go, what you're saying could be a plausible solution is get all exchanges to offer their weekly products to expire on the same day. That is something that the NSE would be agreeable to, right?
I think everybody would be agreeable to that. Why wouldn't they be?
Okay.
All right. Sriram, thank you very much for patiently taking all those questions and explaining the matter at hand. And of course, NSE stand as well, the largest exchange in the country by far. And, it's moving ahead with changes on the F&O side as came through last evening. Thank you very much and look forward to our next interaction. We'll take a quick commercial break here. We're going to come back with the management of Blue Star. Is it getting a little hotter? And I think AC stocks, typical AC stock rally, right? Before it starts getting really hot. I think that rally got a little delayed because the broader market was a little weaker. Usually this happens at the start of the year, but it's happening now. Stocks have been performing. We have Mr. B. Tyagarajan, Managing Director at Blue Star, join us on the other side.
Welcome back. A quick check on the markets. The Nifty is up 140 points, but that's not the big story of the morning. The big story of the morning is you have the number of stocks advancing to the number of stocks declining. That ratio is 9:1, not 1:9, as you've seen many times in the last 17, 18 trading sessions. It's 9:1. Beautiful looking screen, at least for the time being. It could be a relief rally, but you are seeing select buying in a lot of stocks in the broader markets, and that's why your portfolio will be feeling quite good. But let's focus on the auto space. Mahindra, they reported higher February auto sales numbers, which were better than expected. Now, the SUV segment did lead the growth. The total tractor sales volumes, in fact, were up by close to around 18%. To understand the way ahead, we're joined by Mr. Hemant Sikka, the president of the farm equipment sector. Hi, Mr. Sikka. Good morning. Thanks a lot for joining in. Well, the agriculture sector has seen a turnaround, and the data of the last few months clearly indicate that. You have sustained growth of more than 15% for the third consecutive month. Can we expect an upward revision in the industry estimate for Q4, where you had indicated close to around 15% growth, and for FY25, which was earlier seen at around 6 to 7%?
You're right that the agriculture industry, especially the tractor industry, has been on a roll this year. We are very happy with the way the industry has grown. We are looking at a very strong Q4. As you know that February was a very good month for the industry. The industry grew by 13.6%. And at Mahindra, we have outperformed the industry significantly by growing 19%. So we have gained some good market share. We are expecting this momentum to continue into the Q4. And Q4, our guidance stays at 15%. And if this 15% happens, which we are very confident of making this happen, the industry will grow closer to 6.5% to 7% kind of number. So we maintain the same guidance. However, since we are gaining market share, our growth will be obviously better than the industry number.
Okay, so you're looking to grow better than industry. Do tell us about the latest market share trends, Mr. Sikka. As of December 24, I think it was just a little over 44%. Now we're talking in March. So where are you?
Yeah, so our YTD market share end of February is 43.6%, which is a gain of 1.7% over YTD last February.
Okay, all right. So, hoping to maintain those market share moves. Will you right now be in a position to give us some estimates for FY26, or is it still too early? Because obviously we're still waiting for the Met outlook for the monsoon season. But any estimates for FY26 in terms of growth?
It's early to comment on FY26 because we have to wait for some early indication of the monsoon. Usually we get our first estimates from the Australian Weather Bureau, which comes in by middle of April. And IMD also comes with this early forecast by end of April. So based on these two forecasts, we will be able to kind of give our first estimate or the outlook for the industry for FY26.
All right.
Okay, all right, Mr. Sikka. Well, we've recently seen the government announcing income tax relief in the budget, and even the RBI has announced that rate cut. Do you see the impact of this playing out too? Or the demand is majorly on the back of a good monsoon, healthy reservoir levels as well?
Yeah, so agriculture, say overall, we have seen a lot of buoyancy in our target segment. Clearly, there are various factors which are playing for it. First of all, the Kharif crop was very, very strong this year, and the monsoon was 108% of LPA, long period average. So if you get a good monsoon, obviously, then it helps the Kharif crop, and also the reservoir level is at a 10-year high level. So that helps the winter crop, which is the current crop, Rabi crop, which is going on currently. So if you get back-to-back good crops of Kharif and then Rabi, and the prices are holding up very good, we have seen that the terms of trade for farmers are favorable to farmers because their input inflation has gone down, but the prices are still steady. Also for Rabi crop, the government is also supported very nicely with increase in MSP for key crops. So overall, if you see back-to-back good crops, government support coming in terms of MSP being better, reservoir levels being good, inflation being favorable to the farmers. So I think all these factors are helping all the momentum that we are seeing build up in the tractor industry.
Got that. Sir, the agri-business, the tractor segment currently forms about 22 to 23% of your total revenue. Is there any medium to long-term target that you'd be able to sort of increase it to, say, a next level? What essentially is going to be the pace of growth in that business, and how will that increase as a pie of the overall business for Mahindra?
No, so there is no such target. We want both our large businesses of auto and farm to do very well. And we are very happy that both the businesses are firing on all cylinders, and both the business continue to do very well. We are very happy about where we are today.
You have two tractor manufacturing units in the US. So in that sense, you kind of sort of satisfy the criteria, make in America to that degree. Any impact, though, of the recent tariff announcements, pronouncements, threats, etc., on the business per se?
Not that we are aware of, absolutely. And you know that US is our second largest market outside of India. And we are very happy to share with you that we have on-ground plants in United States of America. We have two large tractor plants, one in Houston and one in Pontiac. So we do a lot of manufacturing of our tractors right out there in the US.
Okay, all right. Mr. Sikka, we will leave it on that note. Thank you very much for joining in, and good luck with all of those plans as we get set for the new fiscal year. Well, with that, just a very quick check on the market before we move on to the next company. The market's doing really well. Look at the big flurry on the screen, almost 1% up on the Nifty. Haven't seen that in a while. Mid-cap index is up about 1.5%. It's a nice big sort of shade of green. Lots of stocks doing well, and we'll tell you more about that in just a bit. But, while the market's all green, it's getting all hot and red outside. We're talking about soaring temperatures from the north, where the winter has been warmer than usual, to here in Mumbai, where, of course, the heat wave seems to be on. Blue Star is the next company on our radar. And obviously, the market's getting very excited about a lot of the AC makers expecting big sales this season. So is it going to play out in that way? Let's ask Mr. B. Thiagarajan, Managing Director at Blue Star. Mr. Thiagarajan, good morning, sir. Thank you so much for joining in. So the brokerage notes have started pouring in. They're all expecting your sales to be very good. You tell us, so far, January to and now we're in early March. I mean, what is the progress and what's the inventory like? And also, I mean, overall, what's the demand you're seeing in terms of stocking before the season kicks off?
Shirvi, good morning. It's a pleasure interacting with you. It has been an excellent quarter. Right from the festival season, the momentum once again picked up. And I think this quarter, the industry as well as Blue Star should grow more than 30%. March has been exceptionally good. The channels have begun stocking up for the summer season. And the inventories we all plan much ahead. And as you're aware, last year, summer season was an exceptional one with over 57% growth.
And I don't think on that base, again, one can expect more than 50% growth. My prediction is that it should be around 25 to 30% growth for the summer season. And I've told you, on a full year basis, CAGR till 2030 is estimated at 19%. So for the summer season, it should be more than 25%, even on that huge base. But one will have to wait and see. These things change suddenly if there is an unseasonal rain. But the IMD forecast and actually what we are experiencing and the consumer sentiments are driving this category. We are very happy about this.
Okay, so take that point that you had a very high base last year, and on top of that base, the industry is expected to grow 25 to 30%. What about the potential of taking any price hikes, sir? I don't know if any have been already done February, March. Please tell us if you've been taking price hikes, and is there enough elbow room because demand is going to be strong? What about pricing and margins?
Price hike was done in February, actually, effectively. And, you have to wait and see the inventory position of various players versus what is the market demand. That will only give you the headroom. As of now, the competition is intense, as you can imagine, with the manufacturing capacity that has more than doubled. And every player is trying to maintain or grow the market share. And,
how much was the price hike, sir? The February price hike?
In our case, it was 3% in quite a few models, 4% in a few models. And that is to compensate for the raw material price increase.
Okay, so in that case, since you've taken that 3-4% hike, are you fully covered for this raw material price increase, or could we expect some more hikes, say, maybe come April?
Our policy has been clear that there is a market share goal and there is a margin goal. And we have maintained in this particular segment 8 to 8.5%. The margin is the one that we are attempting. At the same time, going above 13.75% market share to 14.25%, which we will target next year. And in that context, the prices of raw material hike has been passed on. But I think there are other costs that are coming in, like, for example, consumer finance, which for the full year basis, my estimate for Blue Star is close to 40% of the sales happening through 0% interest finance scheme, which you buy the interest down. And there is an extended producer responsibility in this industry. And, 10 years ago, whatever number of units I had sold, 70% of that will have to be procured and recycled. So like that, there are other costs that are coming in. And the media costs as well, like something like IPL. It has become prohibitively expensive this year.
Okay. Sir, on the margin, I missed that number. You're saying full year margin, you'll be targeting 14%, is it?
No, 8 to 8.5% in segment 2.
8 to 8.5%.
14% margin means I'll celebrate, should be.
I know. Yeah, I think my ears were ringing, which is why suddenly my eyes popped up when I thought I heard 14, but it's not. It's 8.5%. So right now, what is the capacity utilization that your plants are working at? And just if you could leave us with an outlook on CapEx as well, as we get ready for the new year.
100%. We had a Himachal Pradesh factory which produces 6.5 lakh unit. That is frozen at that. We won't be expanding there. And the Sri City factory was a 1.2 million unit factory. Every year, around 4 lakh units are being added depending on the demand. So in the coming financial year, it will be 6.5 lakhs units from Himachal, 8.25 from Sri City, which makes it actually 14.75. Around 2.5 will be procured from outside. So we are actually targeting something like 1.75 million units. We will cross 1.5 million units this year.
Okay. All right, so we'll leave it on that note. Hope to be able to get you on a better line so we can see you as well. But I think those were very helpful inputs coming through with respect to summer demand. I look forward to talking to you again as the mercury continues to climb. That's Blue Star. But with that, just a quick check back on the market. Like I was saying, the markets continue to soar along quite nicely, 160 points higher. Let's very quickly take stock of what's taking the market higher. Actually, it's across the board. Some of the commodity stocks like Tata Steel are doing very well, about 3% up. Remember, a lot of the China headlines have come through, and China's been talking about, of course, more stimulus. They're talking about 5% growth as well. So it's all along expected lines, and maybe that's kind of helped some of the commodity names, the metal names in particular. Trent, M&M, Eicher Motors, the beaten down auto stocks, they're also recovering. Tata Motors is also up today. So it's looking good. And the bank Nifty is up 0.7 of 4%.
You know, it's after a while that we have 0.5, 0.6% gains on the Nifty. Absolutely. On the day gains on the Nifty. And more importantly, there's a sea change in the broader market. 10:1, advanced to decline. 10 stocks up for every stock down. And this is, what we've been referring to. A little bit of selling exhaustion has been visible on the screen with no volumes on the downside for the last 2 days now. So it's not just large caps. It's not just that 0.5% on the Nifty. It's the broader market as well, where there is enough and more activity. We'll get down to individual names, sectors, stocks, etc. In just a bit from now. But I think, Surabhi, we have our next discussion on the line.
Yes, and we're trying to get to the consumer pulse, the retail pulse, with our next set of guests as well. Retail sales in India recorded a 5% growth in January 2025. So what's demand looking like? And what about this whole stress around urban consumption slowdown? Let's discuss these trends. We have with us Mr. Kumar Rajagopalan, CEO at Retailers Association of India, and Gautam Saraogi, Executive Director and CEO at Go Fashion. Gentlemen, thank you very much for joining in. So, Mr. Rajagopalan, let me come to you. So that was Jan data that RAI put out, 5% growth. How has it been in February, and what do you anticipate, given this whole talk about urban slowdown, cut back in spending because of inflation, etc.? Is that really still playing out?
Yeah, hi, good morning, Surabhi. I think the data is showing 5% for January. It doesn't look like it's going to be anything dramatically different in February also. Our numbers are yet to come in, but from whatever data we have or from whoever we've spoken to, it doesn't look like a big change. In fact, throughout this 23-24, this is the kind of growth that we've really seen, around the 5% level, other than in the months of November, December, actually October, November, December, where thanks to occasions where there was a little bit of a surge to around 8%. The non-discretionary part of the business is still holding well, which means that people are still buying food, etc. But when it comes to items like clothing, footwear, jewelry, I think the surge happens during the months of occasions, and then it dips. We've seen that occasion where companies are still doing well, the premiumization is still doing well, but when it comes to consumption at the middle class level and bottom of the pyramid, it's still worry. The like-for-like sales have remained almost similar for most retailers. It's been same as what was in 2023-24. So we're not seeing a surge. We're not seeing it as dip also. So that is, maybe we have to take heart in that.
Okay, all right. Got that, sir. Well, let's get in Gautam Saraogi as well into the conversation. Hi, Gautam. Good morning. Good to see you in. What's your observation on ground? How is demand as strong as what you perceive? If you could give us a figure as well, what kind of growth have you seen in the first couple of months of this quarter? And the other point is the stock markets have suddenly become jittery. And the fear is that some of those that were thriving in the stock market, suddenly consumption will slow down. Are you seeing signs of that?
Yeah, hi, good morning. So I think, look, like Kumar sir just mentioned, demand has been soft for 3 or 4 quarters. And I think at Go Fashion, we've been, even in this tough environment, we've been reporting double-digit company growth on a YOY basis. So for the first 9 months, we reported 11% revenue growth with a flattish like-to-like sales. So I think the demand scenario is weak, but for us, Jan and Feb surprisingly has been pretty decent. And I think from a Go Fashion perspective, I think we'll end up with decent numbers for Q4. And hopefully, if the momentum continues, then probably we'll see some demand revival from Q1 as well. But up to December, I think overall sales at a consumer level, consumption has been very soft. And our like-to-like sales also till December was flattish. So hopefully in the coming quarters, we should see some kind of improvement.
So, Gautam, I mean, I don't know, are you trying to look at any sort of product differentiation, pricing, any levers that are in your hands that you will maneuver with to try and get people back to the stores and, get those sales back up?
See, one of our key strengths is our product differentiation, right? Because at Go Colors, we have the largest range of bottom wear products in so many colors. So product innovation is something we do on a regular basis. And I think that's what sets us across from a differentiation perspective. So I think in the coming quarters, the new products, the new colors, what we keep innovating in bottom wear is going to be one of the key drivers for our business over the next 4 quarters. So I think product innovation and differentiation is going to be the single mantra for us to stand out from the crowd.
Pricing? I mean, I don't know if retailers are trying to think of pricing as a lever, because we saw that at a departmental store level over the last couple of quarters. When I know as a consumer, the pricing has been coming down a little bit. Discounting has been increasing to incentivize people to buy more. So in fact, if both of you can comment on that, Gautam, first you, and then we'll come to Mr. Rajgopalan.
See, I think from a Go Colors perspective, our discounting levels has been very low right from the beginning, because as the core and non-seasonal product, more than 95% of our sales comes on full price. And we've ensured that we don't discount beyond what we usually do. So from a discounting perspective, we've been very disciplined and strict. As far as pricing is concerned, we are in a volume-led business. So we are not going to be looking at increasing the prices anytime soon from an inflationary perspective. We are going to be driving the business on the basis of volume growth. Maybe if there are long-term impacts on raw materials and when the industry takes a price hikes, maybe then we'll take a hike. But in the short term, we don't look ourselves taking any price hikes.
Taking any price hikes. Got that. And Mr. Rajgopal, your sense, discounting trends, pricing changes, what are your members telling you?
Yeah, I think, Surbi, this is a very nice question, because what we're hearing from most of the members is that pricing, at least on a tactical basis, does not work anymore. Because when you really look at marketplaces, various others who are giving discounts, there is always something on discount or the other for customers all through the year. It's not just autumn, winter or spring, summer, end of season sales. There is always sales happening. But if some companies want to take up pricing as a strategic decision and they are willing to work back on their entire supply chain to bring down the pricing for the customers, it definitely will work. That's what we've seen. But more importantly, like what Gautam has said, I think product differentiation, innovation, the ability for showing a brand to customers who have otherwise been shopping the unbranded segments are the kind of things that's really working. So if you look at companies that are really doing well in this whole last 1 year, you'll see that some of the companies are companies that work in the value segment, but are very clearly giving brands and guarantees for people who are otherwise buying in the unbranded segment. For companies that are already in the premium segment, pricing has become immaterial. Customers are willing to buy it and price is not the worry for them at all. So people who are in the middle, where there is neither a pricing advantage nor a branding advantage, are struggling definitely. And I think they'll have to really rework their strategies. But overall, pure pricing, short term, does not work for retailers.
Okay, all right. Very quickly, Gautam, before we let you go, you spoke of a turnaround in SSG in quarter 4 in comparison to quarter 3 as you delivered a flattish number. Are we bracing for that? Low single digit number in quarter 4? And for FY26, what's it going to be? Gautam, give us a hint.
Yeah, so fingers are crossed. I mean, see, January and February have done well for us, and March is a big month for us. So hopefully if March does well, then probably we will be looking at positive SSG for quarter 4.
Low single digit? Low single digit?
I wouldn't comment on that right now. I would wait for March to get over. But fingers crossed that March should do well. And if that does well, then we're looking at decent, good SSG in quarter 4.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for joining in. Well, the good takeaway is, I guess, like Mr. Rajgopalan is saying, that there are discounts and sales throughout the year. So maybe that incentivizes consumers to open up their purse strings. We need to take a quick break right now. On the other side, Manisha Gupta joins in with the latest from the commodity world. Welcome back. Well, equities are holding up for now at least. Let's figure out what's happening in the world of commodities. Manisha, what do you have your eye on?
Well, I'm looking at agriculture commodities because the last 24 hours has seen a very sharp decline come in for this one. So even as we are looking at crude oil prices trading at a 5-month lows, we are looking at multi-month lows for many of these commodities as well. Well, the U.S. yesterday did implement many of those tariff hikes on Mexico and Canada and 20% on China. And China has retaliated with a 15% on various agriculture commodities that are imported from U.S. And the date set for that is 10th of March. Now, China also is in National People Congress meeting right now, and we've seen GDP targets at 5%. That's positive. And China perhaps could be coming out with some retaliatory measures and some stimulus measures as well. And that is what the street will watch out for as statements coming in from this meeting. But I do want to take you through on what we've seen in case of agriculture commodities. And I'll start with cotton. And the U.S. futures have seen the sharpest decline that we've seen in various days, 7% down in the overnight market. And with this decline, the cotton prices are now trading at the lowest since June 2020. Well, U.S. tariffs on agri-trade is the reason for this, and China is a major importer of U.S. cotton is what has led to this price decline. Not just cotton, if you look at the palm oil prices, we've seen 2.5% of decline overnight for this one. And with that, the palm oil prices are now trading at a 1-month lows. Come forward towards corn futures, and this is going to be a major price move to watch out for. We're looking at corn futures trading at a 2-month lows right now, and China has, by the way, announced a 15% levy on corn imports from the U.S. markets there. The other commodity I want your attention on is soybean. We are looking at 2-month lows in sense of prices there as well, and China has struck a 10% tariff on imports of soybean from U.S., and that is the price reaction that we've seen. I mean, on a day-to-day basis, of course, there's a lot of volatility, but when you look at the price trends over the last 4 or 5 trading sessions, you will see that we've seen a decline come in for many of these commodities. So when you look at the wheat prices, we've seen 8% of a decline come in for this one. Palm oil has declined by 6%. A 12% cut is what we've seen in case of sugar prices also. The reason for that is the sell-off that we've seen in crude oil prices has led to decline in sugar and ethanol prices also. And as you can see, cotton is down 5% in last 1 week and corn down by 8.5% as well. So many of these agriculture commodities, especially where you have major trades happening between US and China, have taken a hit.
Okay, all right. Got it. Thank you, Manisha, very much for that update. With that, we have to take a very quick break. On the other side, our special segment is the economy. Today, Lata will be in conversation with Jahangir Aziz of JP Morgan on Trump's latest round of tariff hikes and the chaos in the markets.